Hello everyone, welcome back to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today 2020 question number 7 in section A. Following information is given by ABC Limited for the year 2013-14. Profit 15,000, fixed cost 30,000, margin of safety 60,000. For the year 2014-15, it is anticipated that variable cost and fixed cost will decrease by 25% and selling price will fall by 10%. You are required to calculate for the year 2014-15 sales to earn a profit at 10% on sales and margin of safety. Profit if the sales are anticipated at 10% above the present BEP. Profit if margin of safety is anticipated 50% above the present percentage of margin of safety. In this question, profit is given, fixed cost is given, margin of safety is given. First you need to find out the sales. Sales na ಕಂಡುಹಿಡಿಬೇಕು. ಸೇಲ್ಸ್ ನ ಹೇಗೆ ಕಂಡುಹಿಡಿಯೋದು? ಪ್ರಾಫಿಟ್ ಕೊಟ್ಟಿದ್ದಾರೆ, ಫಿಕ್ಸ್ಡ್ ಕಾಸ್ಟ್ ಕೊಟ್ಟಿದ್ದಾರೆ, ಮಾರ್ಜಿನ್ ಆಫ್ ಸೇಫ್ಟಿ ಕೊಟ್ಟಿದ್ದಾರೆ. So with the help of the margin of safety, let us find out the sales. Margin of safety, there are two formulas. First formula is margin of safety is equals to profit divided by PV ratio. PV ratio. And another formula is or margin of safety is equals to actual sales minus BEP sales. Actual sales minus BEP sales. This formula we can't use because we don't have actual sales and BEP sales. But this formula we can use because margin of safety is given and profit is given. Let us use this formula to find out the PV ratio. What is margin of safety? Margin of safety, it is given 60,000. Margin of safety is 60,000 and profit is given, that is 15,000. Profit is 15,000. So what is PV ratio? PV ratio. Now cross multiplication, 60,000 into PV ratio is equals to 15,000. ನಮ್ಗೆ ಇಲ್ಲಿ ಏನ್ ಬೇಕು? ಪಿ ವಿ ರೇಷಿಯೋ ಬೇಕು. ಸೊ ವಿ ನೀಡ್ ಟು ಫೈಂಡ್ ಔಟ್ ದಿ ಪಿ ವಿ ರೇಷಿಯೋ. The PV ratio is equals to 15,000 divided by 60,000. Here we are finding the ratio. So into 100. 15,000 divided by 60,000 into 100. What is the PV ratio? PV ratio is 25% or 0.25. 0.25. Now we have find out the PV ratio. With the help of PV ratio, let us find out the BEP in sales. BEP in sales. First we have to find out both the sales. Then we can find out other whatever asked in the question. BEP in sales. Fixed cost plus profit divided by PV ratio. PV ratio. We know fixed cost. It is given. How much fixed cost? Fixed cost is 30,000. 30,000 plus profit is given. It is 15,000 divided by PV ratio. 25% you are writing. So remember, from 0.25 you have to divide total. It is 45,000 divided by 25%. 45,000 divided by 0.25. 1,80,000. BEP in sales is 1,80,000. Right. Now we can find out actual sale. The first formula which I showed you, margin of safety is equal to actual sales minus BP sales. Margin of safety is given. How much it is? 60,000. Actual sales, we don't know. We need to find out. But BEP sales, we have calculated, that is 1,80,000. Now actual sales is equals to minus 1,80,000 minus 60,000. Actual sales is 2,40,000, right? 1,80,000 plus 60,000. 2,40,000. Minus into minus, plus and minus get cancels. It is 2,40,000. 2,40,000 is actual sales. Now we know sales, BEP sales as well as actual sales. Let us find out what is the first question. The first question is sales to earn a profit at 10% on sales and margin of safety. 10% on sales. What is our actual sales? Actual sales is 2,40,000. On actual sales 10% ಅಂತ ಹೇಳಿದ್ದಾರೆ. ಸೊ ಇಂಟು 10% ಅಂದ್ರೆ ಪ್ರಾಫಿಟ್ ಎಷ್ಟಾಯ್ತು ಅವಾಗ? ಪ್ರಾಫಿಟ್ ಈಸ್ 24,000. How you find the profit? It is given in the question. It is 10%. Sales to earn a profit at. What will be the sales to earn a profit at 24,000? Again, you need to find out the sales. But here you are finding with the help of the profit. So what is the formula? Sales is equals to fixed cost plus profit divided by PV ratio. PV ratio. Fixed cost is how much? 30,000. Profit we calculated, it is 24,000 divided by PV ratio is 25%. What is sales? 30 plus 24 is 30,000 plus 24,000, 54,000 divided by 0.25. 2,16,000. 54,000 divided by 25% is 2,16,000 is sales. Now margin of safety you need to find out. So margin of safety is equal to the first formula, profit divided by PV ratio. Profit also we know and PV ratio also we have already calculated. Profit is 24,000 divided by PV ratio is 25%. 24,000 divided by 0.25 is 96,000. Margin of safety is 96,000. When sales increased and your profit increased, then your margin of safety also increased. Next, what is the next question? B. Question B is profit in sales are anticipated at 10% above the present BEP. So present BEP already we calculated. Present BEP is how much? Present BEP is is 1,80,000 which we have already calculated. That is here BEP in sales 1,80,000. This is BEP in sales. On this present BEP 10% above plus 10%, that is 18,000. 18,000. So what is our BEP? New BEP is 1,98,000 is the new BEP. Now let us find out sales. Sales is equal to fixed cost plus profit divided by PV ratio. PV ratio. You need to find out the profit here. Sales we know it is 1,98,000. BEP sales is equal to fixed cost is 30,000. Profit we need to find out what will be the profit when increased 10% BEP sales, that we have to find out. PV ratio also already we have calculated, that is 25% or 0.25 or 0.25. Now cross multiplication here, 1,30,000 plus profit 1,98,000 into 0.25. 30,000 plus profit is equal to 1,98,000 into 0.25 is 49,500. We want to find out the profit. Profit is equal to 49,500 minus 30,000. Then profit is minus 30,000. Profit is 19,500 is profit. Profit is 19,500. So how we got 1,98,000? That is increase on the present BEP. Present BEP was 1,80,000. On 1,80,000 plus 10% we have to do. Then we will get 1,98,000. Then we need to find out the profit. So it's a cross multiplication. 1,98,000 into 0.25. Then 49,500, 30,000 plus profit. Profit is equal to 49,500 minus 30,000. Profit is 19,500. Let us find out for question C. Profit if margin of safety is anticipated 50% above the present margin of safety. So present margin of safety is how much? Present margin of safety is 60,000. On this 50% anticipated above. 50% is 30,000. So what is your new margin of safety is 60 plus 30, 90,000. Same formula we are using. Only thing is you need to understand the question. Margin of safety is equals to profit divided by PV ratio. Margin of safety is 90,000 is equal to profit we need to find out. PV ratio is 0.25. Profit is equal to 90,000 into 0.25 is 90,000 into 0.25 is 22,500. When margin of safety increased, profit also increased, 22,500. I hope you all understood. Thank you for watching. Have a great day.